Hey Scott, thanks. Hey Jamie, how you doing, buddy?
Hey everybody, hello Andy. Happy Thursday.
Yes, happy Thursday to you too. Going into the Labor Day weekend with a big jobs number due out tomorrow, and I've only got stuff flipping around on me over here. Let me move this over there so I can get started here. Yeah, guys, we're excited about tonight's webinar or this afternoon's webinar, wherever you may be, and just uh, as far as the market is concerned, once again, not a whole lot happened, but we got some stuff to bring you. We'll get into our agenda coming up, but just wanted to mention that, yeah, just because not a lot happened in the market doesn't mean a lot didn't happen at Trade Ideas. So we look forward to bringing that to you. So let's get started with the disclaimer here. Okay, guys, we
Hey
are.
Andy, real quick here, you might want to show your screen real quick here.
Oh, I thought I did that already.
Happens.
I was certain I did. And can you see it
There we
now?
go. Bingo.
Oh, good. Okay. All right, great. All right, guys. We are content providers. Okay, we provide tools that do help you profit in the marketplace. That being said, this webinar is for educational purposes only, and nothing that you hear should be construed as investment advice. Okay, if you seek that, seek out a qualified person. So I guess it's time to get on. Let's talk about our agenda for this evening, guys. But before we do that, I just want to tell you about our community here at Trade Ideas. Every time we do a webinar, we have tons of new people in the room, and we just want to point out all the tools, and not only tools, but all the webinars and Trade of the Week webinars that we have to where you can really get educated, not only in Trade Ideas product, but also in getting some great trading knowledge from some of the great traders that are in our company here. The three trainers here are me, Jamie, and Steve. You know, combined, we talk about this a lot, but we're not bragging. We just want to let you know that you're getting professional help on a lot of things besides the great product that we offer. And to start things off, you got the trading room with Barry Anderson, which is, or Einerson, is that the way you pronounce it? But anyway, Barry does a great job. It's a hard job. I know it's a hard job because I've done it, and I'm going to be doing it, stepping him in for him tomorrow and Tuesday. Guy's getting away for a few days, and I don't blame him. But so I look forward to that, guys. For those of you who do attend our chat room, and if you don't, guys, I would highly recommend getting in there, because there's a lot of knowledge that gets just passed around, not only by Barry and whoever may be moderating, but by all the great traders we have in there. It's a great resource, and not only can you get great trading ideas, but you can also get some help, with technical issues, should you desire. So a great community, a great place, especially if you're getting started and you want to get an idea of what Trade Ideas is all about. Yeah, get in there. It really is a great place to be. And Mondays we have Jamie and Steve Gomez that does a webinar, and they bring great new fresh content each Monday. On Wednesdays we have Dan and Brad that does kind of a question and answer. It's always a great webinar, and you can get some really good information from our CEO Dan Merkin and Brad Williams. So it's not only do they provide you with a lot of the knowledge that they put into the product, but also they'll answer your questions that you may have. And then, of course, today we got myself and Jamie. So let's go in now to the agenda for today and see what we're going to talk about. We always start off with the market recap here, okay? Payroll report is tomorrow, so we'll dive into that and talk about how this market kind of sits and waits for the big numbers. We've been talking about it for over a month now, and once again, here we are again. The Holly recap, gold, I tell you. We're going to be spending a lot of time on Holly today, because I think you guys are going to gain a lot of you know, interesting knowledge about to what Holly is all about and what she sees that you may not see. I mean, so I'm really excited to talk about Holly today. Thought she had some great ideas for trading, and these ideas, for some of you who do not have the Premier package, these ideas are brought to you in real time, and you'll see her performance, and we will have a lot to say about recap for Holly, and deservingly so, because she put on I thought, a really good performance in a market that pretty much did the same thing it did yesterday, which is basically finished about where it started. Okay, then I'm going to talk about a little bit, guys, about so what if the market turns, and we'll get to that. I'll explain that as we get into it, and if we have time left over, we'll get into the Q&A into charting. But first and foremost, I think we are going to dive right into the Holly. I don't have a lot of slides. As a matter of fact, I don't have any slides for you today because I think we can pretty much cover everything off our desktop, and because we really want to take a look at Holly today and kind of get an idea of what she saw. So let me pull this out of the way without shutting it down. And I'm frozen. Great. There we go. Collapse. Thank you. I did it again, Jamie. I forgot to cover the spiders. Yeah.
Hey, that's
well, you know
there's
what?
no problem there, Andy, because you can just you're in control here, buddy.
Well, here's the problem. It's like, you know, it keeps doing the same thing over and over. We're a broken record in here, but we do want to touch on it. So let's take a look at it, guys, because
right. And Andy, before you get into that, of course, it does seem like a broken record because of where we are in the cycle, right? But that's part of the game, because guess what? It won't be like this forever, right?
No.
Before you can, of course, we've just ended the most, historically the most boring part of the market, which we did get a little bit of boring in there in the last couple of weeks of time, because this summer and the previous summer have definitely not been your typical summers. So as everybody knows, this week is almost up. We're right here at the beginning of September. We've got the long holiday weekend in front of us. So, the market is heating up for sure. Not quite hot enough yet, but, rest assured, whether we go up or down after this long holiday weekend is over, we should have some volatility creeping back in. Call me crazy. That's just my 2 cents.
No, I totally agree with you. It's and getting back to what your point, yeah, it's not going to be this way forever, and that's a very valid point, and that's why my last topic today is going to be on, what if things turn, because I think you have to be ready for it. It's because we've been, and this is I'm getting ahead of myself. I'm going to save this for the topic. So let's talk about the spiders. And once again, guys, we are just talking about in Holly's world, in Trade Ideas world, just a small part of the market, because she is able to find alpha, a long, short, and so are the customized alerts that you can build, the customized alerts that we build here as professionals, as a part of the Trade Ideas group. We're able to find movement in the market, even though the spiders have been pretty much, range bound for all of this month and pretty much all of last month. So, that being said, but people like to talk about the overall market, and they use the spiders as the benchmark, indicator. So that's what we're going to talk about. And guys, today we saw the same old song and dance where we tried to drive it lower on the 5-minute, open up, drive it down all morning, back and forth, stabilize, get the midday pop, back and forth, and then the kind of the 3:30 ramp and closing pretty much at that is called a doji right there, for those of you who do not know what that is. My concern, as expressing to Jamie and when we were prepping for this, is I'm a little bit I'm a little bit more cautious on this range, and we'll draw this line up here and mark up. We'll call this range up here compared to the last range we had. That last range we spent the majority of the time kind of knocking up against highs. And now I'm seeing more of kind of just the opposite. We keep kind of bouncing off, banging on the door, trying to break the ice to the downside. Although the bulls have found a way each time to rally it back, pretty much even or above this horizontal line, which was basically the highs, that plateau we saw last month. So we are holding up, but to me, it's not the same, the same kind of strength as you saw over here in pretty much all month. And then, of course, we had the head fake break below to shake all the longs down and pop up. So the jury's still out on this for me because I think I'm seeing a lot more weakness in this range than I did in this range. But time will tell. I have been fooled so many times in this market. It's definitely not a time for me to start putting on shorts and swing trades and things like that. But nonetheless, I would keep. We'll see what happens and keep an eye on it, because I think if it does break, below this range, I think it once again can get pretty ugly. Any thoughts on the spiders there, Jamie?
Yeah, and of course, Andy, like me, you, Steve, like we're always talking about, we'd have to see a close, below that level, which it came pretty close today,
Mm-hmm.
with that doji, but once again closed right on the line. So we'd have to see a significant close below that line to really, I guess, get some heads turning and some chins waggling. But once again, when that comes, we'll all deal with it, because as we always say, we don't really like to try to predict, with what we're presenting here today and the methodology that we present on a, every webinar basis. It's all about taking the information, making sense of it, and then acting accordingly, reacting, right? That's what trading's all about. You'll have other camps that stay slightly different. But as far as a reactionary tail, what we're seeing up here is when the time comes, there will be writing all over the walls if you know where to read, right? There'll be signs all over the place. A very good example of that today is the Holly activity. One strategy kind of took the lead here today, getting long in stocks while the market was going down, right? So Holly still found an advantage to get long a nice little basket of stocks today while the market was going down. It did quite well with those, and that happens more frequently than most people are aware. Of course, I don't want to steal your thunder here, Andy. So
No, not
if
at
you
all.
want to go in and
As a
talk
matter of
about,
fact, that's a good lead-in, because I think that's kind of what we want the focus of this webinar to be on, guys. And the first thing I want to pull up is the trade ideas analysis, and this can be found in our sectors on the channel bar, guys. I pulled this from the sector list right here on our channel bars. There's a lot of great information on the I think it's 25 channels that we have, guys. You can find a lot of good top lists, a lot of good alerts in there, but this is where the sector analysis came from. And the reason I wanted to bring it up today, this is a top list, and of course with the top list, guys, you can always go back, go to time frame, use historical data, and change it to whatever time that you want it to be. So I noticed, and along with Jamie today, if you look down there in the entry time, and I will show this, I gotta hold on. Okay. I will pull it up here and show it, so we can drag this down here and show a little more. But look at all these trades that went off at 7 o'clock today. And what do they all have in common? They're all gold miners or a few silver miners, in there. But even FCX has a gold and silver. So you can basically say, the top 1, 2, 3, 4, 5, 6, 7, 8, 9. So about the first 9 trades that went off had something to do. They were either a gold or silver miner. So you pull over up the sector analysis, and I backdated it to 7 a.m. I'm on Pacific Standard Time, guys. So this is at 7 o'clock, right when those trades started to go off, and you can see here the gold index, top of the tier there. And look what's interesting. Change in the last 20 days was almost down 20%. So Holly was definitely seeing something this morning, guys, and this is where, guys, she provides so much value, because if you're doing your homework and you're coming in this morning, yeah, there's a few people that look for pullbacks on intraday charts and daily charts, and looking for extended moves and gap fills, whatever you may have, looking for support. But not too many traders that I know, do this and can go this far back. And I'm going to show you a chart here, the GDX, and show you what I'm talking about, because I think it's really impressive that she was able to pick this 5-day bounce in this sector. So we're going to pull up the GDX, and something that I really noticed first off the bat when I pulled this up today and took a look at it this morning. Look at this first huge sell-off, and that's the point I was making. And not too many people are looking to buy a chart like this. I mean, it looks kind of like it's rolling over, almost like the inverted trend change lubricant. But let's see what Holly sees. If you go back here, guys, on 6/23, you got a close here of $25.22, $25.22. Okay. Notice yesterday low was 25.33. You know how, guys, I'm always telling you about dailies and how they have a tendency to fulfill their destiny? Well, it wanted that gap fill bad. So what did it do this morning? It opened up down, traded down to 25.17, which was just a few cents below this close. You got your gap fill, and then the 5-minute chart got your gap fill, boom, and the GDX started popping right here. So what I'm going to do is turn this over to Jamie, because he's really good at laying out Holly and the strategies. And so if you don't mind stealing the presenter from me, Jamie, I'll turn it over to you, and we'll take a look at some of these incredible gold plays that Holly had.
No problemo. Just let me know when you can see my screen.
I can see it.
Okay. Wow, I'm almost blinded over here by all this green. It's just like Christmas, but without the red. So, just exactly what Andy was saying today is that all of these stocks that were issued, and of course, I've got these sorted by profit, but let me just kind of give it a quick sort by time. And we can see the flurry of activity over here on the left on the times. And yeah, you're exactly right. All of these were mining stocks. Different metals maybe, silver, gold, but all mining, all in the same sector. And that was pretty much all of the stocks that the 5-day bounce strategy produced today. Now, before we get into the individual trades here, we'll just take a look at the strategy panel. These were the guys that made the cut for today, made the minimum score on our proprietary scoring system. Gentleman was asking a question earlier, is the 5-day bounce a new strategy? And no, it's not a new strategy. It's existed in what we call our quantitative combine of strategies for quite some time, which there are approximately 40 strategies in that base strategy collection. However, Holly analyzes them each and every day after folding in today's market data for every stock, reruns the numbers to see which ones are going to make the cut for the next day. So we had a nice little assortment of strategies make the cut today, but we can see here, float on down, these guys did not produce trades, as we can see from the trades today column. These guys all had zero because the very specific criteria for those strategies was not met. All of these guys fired. We had 2, 1, 4, 13 here, 2 here. And then, of course, the big winner today was the 5-day bounce, kicking out 14 trades and operating at an accuracy or win rate of 71.4% here. So risk on profit just from those 14 trades from 5-day bounce coming in at 4.69 points for the day. Now, the thing about this is it reminds me of a saying that Steve Gomez likes to say all the time. Steve says that chance favors the prepared mind. Kind of ties back into what Andy was talking about at the beginning of the webinar. What if the market changes? Well, while we don't need to obsess and fixate on the market changing directions, because that's a recipe for disaster, seen it many times over my career in the business. Guys just thinking there's no way that this market can go any higher. I'm going to start getting short. Next thing you know, account's getting shut down because, that's just his opinion, right? So rather than try to predict, what we need to do is be prepared for many different scenarios. Holly was indeed prepared for many scenarios today. Let's just do a quick count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 12. Holly had 12 different scenarios that she was prepared for here today. Now, try doing that as a human, right? Ha ha, funny, funny. Not doable. Not possible to crunch all the numbers that Holly did to arrive at this point. And even if we could, trying to balance 12 things on our own on any given day is quite the feat, and probably not, highly probable of pulling off success with said feat. A lot of people grapple with just, what to have for breakfast, or should I, trade in the first 30 minutes. So Holly's piling on a lot of things on her plate that she has to take care of every day, but that's fine. She can do it. She's equipped. Now, she can't read charts, right? And we'll get into that here in a little bit when we talk about whether we should stay in with Holly or try to milk a little bit more alpha out of each and every trade. But for right now, let's just focus on the title of this strategy. The 5-day bounce made the cut today. Now, it just happened to coincide with all of these mining stocks in the mining sector having their 5-day bounce. Now, it could have easily been another sector. And there are probably other stocks and other sectors that were on 5-day lows today that did not bounce, that kept on going down. Now, why did the mining sector bounce after 5 days today? Well, I couldn't really give you a concrete answer right now, but based on what we saw unfold today and how Holly reacted, the reason that the mining stocks met that criteria is because all of the filters in this very specific strategy were met, i.e., the statistical probability that the mining stocks would bounce today after 5 days was much greater than anything that she saw out there in her analysis of the market. So therein lies the trick. She was prepared for 12 different scenarios, but this one really paid today, and it paid handsomely. And the only way to ever capitalize on this is to have been prepared for it. And that's what Holly does. This is a classic example of what artificial intelligence can do for me, you, and anybody else out there that's got a little bit of skin in the game when it comes to trading stocks. So let's just kind of dig right into the trades here. And usually we've got more of a distributed trade count among strategies that produce for the day. And every once in a while, we'll have one of these guys where, Holly just really saw the opportunity, and therefore she, stepped on the gas and took advantage of it. So when we start looking at these entry times here, we can see first guy off the block here was AVX. 1 second into the 1 second after the first 30-minute period, 4 seconds later. So while these are coming through at a pretty good clip, we might be clicking pretty rapidly to keep up with them, but fairly manageable for a very busy time, which this is about as busy as Holly gets. 3-second gap here, 3-second gap between these trades, and then it becomes a little bit more spaced out. But if we take a look at the trade blotter, usually what we'll have is a more distributed blotter from the strategies, and we'll have different instances of staying in a trade, what we call going risk on when Holly gets out, based on a time stop or a profit save exit. And then we'll have a couple of good examples of a trade around where Holly gets stop trade, where you can see here, stop hit, 25-cent loser, stop hit, 25-cent loser. But there just weren't a whole lot of them today. Today was just straight up, most of the time, what she bought worked immediately. All right, so let's just make sure we sort by this column, and then we'll take a look here. Where, as I said earlier, not so many trade arounds, but decisions that to be made on risk on, and then even adding to some of these positions. So taking a look at the trade blotter here on ABX, risk off was only 8 cents. Holly made 8 cents, and we look over here at the exit reason, profit save. So we've had the profit save and the reduced risk implemented for a couple of months now, and basically what that's telling us is, I'll double click here, now we can see ABX on the 5-minute. Let me get this chart a little larger here so we can see a little bit better. Okay, so now we're looking at ABX, as everyone can see here, 5-minute candlesticks. Blue arrow indicates the bar in which Holly issued the trade, and the blue box over here coincides with the entry price. So we can see when we draw the line straight across, once again, a textbook entry from Holly. For those of you who attend the webinars on a regular basis, this will sound familiar. For new, the pink over here is pre-market, so this is the opening bar. Now, once again, very indicative of a Holly entry signal. We see not only an excellent price to get long, but we see this nice little mini consolidation area, which doesn't happen all the time, but has sure been happening a lot more frequently when we analyze the Holly trades. We typically see this nice little micro consolidation, what's otherwise known as a NR7 type pattern, which is kind of a comforting thing when you're thinking about going long right here. So if you took the call from Holly and bought it at 17.10, 17.12, 13.14, whatever, not chased it too much, then it was just like that beach ball that had been pulled underwater. All it did is go straight up, take another little breather up here, very similar to what we're seeing down here, and then head higher. So on ABX, I mean, what a great entry, just cut and dry. But then let's say you popped into a couple hundred shares here. Nice move up to 1750. Stock starts to flatten out, and you're thinking to yourself, okay, well, I've seen this before. This is that same little micro consolidation that was occurring down here. So, whether you peeled out a half up here and said, okay, and keep in mind, the stop loss, we're looking way down here. So never even acted like it was going to approach our stop loss. But the bottom line is this. You plug into a couple of hundred here, it gets up here. Who starts tapping you on the shoulder? Well, on the right shoulder, I've got the greed demon. He's saying, you're up $100 on 200 share trade, what are you going to do? And then I got the demon sitting on my left shoulder, fear, oh, this thing might tank on me. Oh no, what am I going to do? Well, number one, if you're seeing this type of activity, it should give you a little bit of confidence. No, it's not tanking, but how do we satisfy those demons? And by the way, no matter how long you've been in the business, 2 months, 2 years, 20 years, they never go away. They're always there. Now you can keep them quiet by feeding them a little bit from time to time, and that's what you do right here. You feed them a little bit. Okay, I'm in 200. I'm going to peel out of 100. I'm going to give the other 100 a stop loss back to flat, or a stop loss to where I only make 10 cents, whatever your preference is there. But then we have additional movement in the stock. So we run up here, we go range bound yet one more time. We're used to seeing this little coiling pattern here because we've seen it over and over. Jamie, Steve, and Andy have talked about it numerous times over numerous webinars. So we're absorbing that information. We see what's happening here. So what would we do next? Once this bar puts in its top and it starts chopping around down here, we just simply draw another line. So then circulate and pop and encroach on that high, and it pops that high again, and the volume's decent. Well, there's the range break. First range break was here. Well, that was actually the Holly entry. The first range break that we saw here was before the Holly entry. So even better, we got Holly's entry signal here. We manage our risk, take some profits here, and then we have a second entry potential right here as it snaps above here, and we look back 15 minutes to assess our risk. So risk would have been right down here. So ABX, lots of opportunity, way more than 8 cents in the potential, because once we're in the trade and we're wearing our trader's hat, not really any reason to get out. We're not scared of these wicks. Holly's going to take the opposite approach and lock her profit in. So, risk on profit of 73 cents by tacking on a few more shares here and practicing the rule set that I just described here, we could have potentially doubled what you see right here just on ABX alone, just from going through the same methodology and setting up the same horizontal lines, which are about as simple as you can get from a trading perspective. Anything to add on that ABX, Andy?
No, just I mean, you covered it. You covered it very well. I just still go back if you can go back to the daily and on the ABX and maybe stretch it out a little bit. I just thought that was a really good call by Holly, because not only did you have the gap that she filled back there yesterday, but she took that entry well before a lot of people like to wait for the bar reversal in a chart like that. You've had 4 consecutive down days, but once again, Holly saw something that we couldn't in all the data mining that she's able to do, and took that well before the bar reversal. So that was impressive. Yeah. So I just wanted to throw that point out there.
Right, and of course, the further we get away, the further we get down the list here on the time priority, we can see that the moves are getting less and less, which is very interesting. So what do we have next on the list here? Sort back by profit again. BVN. Once again, another mining stock. Here's the entry for Holly. And it's just more of the same. Hey, most of us were unaware of this sector. Now, some people might call it coincidence. I'm one of these people who doesn't really like to delve in or subscribe to coincidence very much. I like to think of it more as synchronicities, right? Well, as I said earlier, there were plenty of other stocks out there that were on 5-day lows in other sectors as wholes, hitting 5-day lows, but they did not bounce. The reason this one bounced is because it had statistical probability behind it. So chance favors the prepared mind, and boy, was Holly prepared today. And Holly's always prepared. Despite our best intentions as traders/humans, we always intend to get lots of things done. Some of us get them all done, but the majority of us on average, we're humans. We fall a little bit short. But see, that's where Holly comes into play. She can fill that part of your trading regime, and there are certain aspects that computers and automation can fill in for us, but things like chart reading, we have to do that ourselves. So it can tremendously lighten your load as a trader if you just have to focus on the picture and let the statistical probability and all the hardcore computational things get done by Holly, who can do more than you could in 10 years in one night. So, hey, look at this one. Another great trade. As soon as Holly buys it or calls the long signal, straight up push, little pullback, and of course, once again, not coming anywhere in the neighborhood of a stop, which was way down here. So, same scenario plays. Hey, if we pop 200 shares here, maybe you get antsy up here. It just depends on how comfortable you are staying in a position that's working, and then looking over here to try to figure out, okay, well, is this one doing what all the other ones do? Also giving ourselves some additional comfort by going, hey, I see Holly's getting long here. It's also snuggling up to this prior resistance, which has now kind of become prior support. This looks good. It looks just like ABX. And then when you start seeing all these other ones come in, and you start seeing the same thing, even better. Not only is Holly providing you with sound statistical entries for alpha capture, but she's teaching you at the same time. So with BVN, once again, after this little initial high gets put in, pull back, another initial high, pull back, we go range bound. Well, then my mind's already doing this. It's already saying, okay, well, second entry time has come around, or it might come around anytime soon. So what do I want to do? I want to be sure that I know when it comes back through this price level here, which is 1278, which brings up a good point. How do we make sure that we don't miss that second entry? Well, all we have to do is right click and create our price alert. 1278. If it rises to there, I want to make a second entry. I want to check the volume at that time to make sure that it's not occurring on weak volume. So if the volume is there, of course, that's whatever metric you tend to like the most. Some people like the 1 minute, 5 minute, 10 minute, 30 minute. It's all up to you. All of those time frames can be useful depending on the things that you like to keep track of. But, I would also notate here so that when that triggers, I know exactly what to do because I've got multiple alerts firing. So as we can see here, of course, it's going to auto-execute right here because that has already happened. But I just wanted to give everybody an illustration of how easy it is to set that price alert just by right-clicking, selecting that first option at the top there. Now, I'm going to delete this so as not to pollute my price alert window because I don't want to build any artificial profit in there. And by the way, what you're seeing right here are the 6 limit alerts that Mr. Steve Gomez and I set for everybody back on Monday. So you can see 4 of those have already triggered, 2 are still working, and while it's not a huge profit yet, about $1.31 on the 4 positions that have triggered and are all working. All right, so moving right along here, this is just going to look like a broken record, okay? Because, once again, here we are looking at PAAS, Pan American Silver. Entry was issued right here, a little late for the break as well because we can see right here, range break, but unless you were really just focusing on these stocks at a random whim or it came across a high-low ticker, you would not know that the statistical probability was extremely strong for the miners to bounce today. There's just no way you would know that. So you kind of disregard this opening little pattern right here. Holly says get long right here, and then once again, off to the races here. I could mark it up right here, but it's really just not worth it because, as far as a lot of movement left on this one, there just wasn't that much. And you'll notice a correlation. The further we get away from the open, the less run is in these stocks because, they're all typically moving in unison. When a sector moves, every once in a while you've got the 1 or 2 stragglers that won't move, and there's a chance to get a hold of those. But then on the other side of that coin, Andy, and I'm sure you can relate to this, sometimes you're in the straggler and everybody's piling into it, but it's not moving. Yeah. And you're like, oh no, well, what's wrong with this one? So
absolutely.
Like clockwork, you're like, I'm out for my 20 cents, and then of course it rips a buck.
Yeah.
But when you're dealing with it in this capacity, things that tend to happen all at the same time. But the beautiful thing here is the small gaps in between the entry times here. Holly was just about in just about every name in this sector. So there was the PAAS, SBGL, looks exactly like the last chart. All you had to do was take a little advice from Holly. And I know that looking at this green bar here, we see this part of the pattern, and then we're like, ooh, well, that kind of feels chasey, right? I mean, that's what, you, me, everybody out there is going to see that and go, it kind of feels like I'm chasing. However, when you look back here, it kind of negates, the chasiness. Mm-hmm. And then, especially since you're seeing Holly get long and all the other mining stocks that are all, on the same tangent here, then, yeah, at first glance that can seem a little chasey, but when we look at the margin over here, these are only 10-cent increments. So, that's really only about a dime there, even though it looks a lot bigger. Yep. But,
and if you look at the daily too, you got to always tell people, yeah, if you look at the daily, then you got to ask yourself, okay, is that chasey? I mean, look at that beautiful, right. A little spinning top yesterday, and then back to pulled back to the support line, and then just popped out above it. So that, to me, that's a beautiful little entry there. And one, somebody just asked in the questions panel, can can Holly help with swing trading, and our whole software can help with swing trading, and I
These are
presented a
all
couple of
perfect examples of swing
yeah
trades as well,
yeah
because what we do, Holly is designed to give us good intraday entries with highly weighted statistical probability. That is what we call the first part of the equation. Now, how long you hold it, that's part two of the equation. And how long we hold it is going to be based on what our perception of the long term is and how much room may be left in that move. Correct, Andy?
sure, absolutely.
Okay. So let's just take FBGL. Hey, we made a really good entry with Holly, and it just went straight up. Yeah, it had its pullbacks, but, holding the stock, we definitely had plenty of opportunity to get out for a profit. Now, after we first made the move, and maybe it puts in its top up here, and we're thinking to ourselves, I wonder if I should hold this overnight. Well, what do? We look back over here. First we go, okay, well, this strategy is the 5-day bounce, so these stocks that it's spitting out were probably down for 5 consecutive days and are now bouncing, right? Pretty simple,
Hmm.
pretty straightforward. And then, as Andy says, when we see, that little spinning top and then a bounce and then we're in the green day right here, we have to start looking to the left to figure out, okay, if this is a train that's heading north, these could be the potential stops that it makes along the way. Now, whether we use the tops or the bottoms of the candles or the tops of the wicks, that's kind of just up to each and every trader and how they like to operate. But, here I am just drawing some rudimentary lines, across some of the bottoms of these candles, the top of this one right here. Coincidentally, look where it stopped today, right at the top of that previous candle, right? Now, tomorrow, depending on where we open, Andy, feel free to chime in here because I'm just kind of, getting
No,
a general
I feel
roadmap.
like it could easily, want to retest that $17 level. So there's a lot of potential. It had, let's face it, gold had a great run, the miners had a great run, and this is a big breath it just took. So I think just fundamentally speculating here, people are maybe expecting a rate hike pretty soon, which could be negative for gold and good for financials, but maybe people have gotten a little bit too negative on gold and too excited about a possible rate hike. So, time will tell. But I'm not. I look at things technically and not fundamentally. So yeah, to me, this thing that looks like it could definitely go and at least get close to retesting that 17 level, which would be another 70, 80 cents, and then if you're a swing trader, then you may pull off half and then see what's left. But that's the way I operate usually when I'm swing trading. I always, usually the first 2 or 3 days, I will take a chunk off and then just put an alert to go off. If it violates that alert, then I dump the rest.
Absolutely.
Yeah, but
Yeah, and of
I
course,
think. Go ahead.
I was just going to say, today it just happened to be the mining index or the mining sector. And of
Yeah.
course, we all know that, typically they're going to run inverse from one another. When the market's going down, a lot of the times precious metals and mining stocks are moving up and vice versa. Now, it's not always the case, but it seems to happen when we get to these upper extremes and lower extremes is when
Sure.
it's the most obvious.
Yes, absolutely.
Okay, so let's see here. Just wanted to click on a few more trades here, but as we can see here, I just clicked on SA, and of course, a lot of these charts are going to look the same today.
Mm-hmm.
So, here we go with the Holly entry one more time. Another, whether we use these wicks, depending on what type of trader you are. Some people like to omit wicks. Some people like to use the bodies. The candles, the bodies of the candles. But in any case, whether you're using the wicks or the tops or kind of a halfway point, once again, room for second entry here, room for a second entry here. As we like to point out all the time, a lot of these patterns are fractal. Like the range break, that's a fractal pattern. Can appear on any time frame, daily, intraday. So once again, Holly's pointing us out to the ones that are the most statistically probable of working, and then as the pattern presents itself, we can figure out additional entries to those stocks. It's just like we always used to say in the old days, Andy. We'd be on a trading roll, right? Things would be working, and then all of a sudden they would stop, right?
Right.
So we have to figure out, okay, one of the old sayings was, if I just knew which stocks were in play for the day, I'm a good trader and I could probably do well as long as the stock was in play. But that was the whole, a lot easier said than done. So this really is the void that Holly is filling. And you never know which voids are going to be filled with a technology of this nature until it's actually in play. But from what I've seen with my own personal stuff and the feedback that I've been getting from clients, and not just new people, but people like us, Andy, that have been around for 20 years and seen and done just about everything, that are now getting exposed to this technology for the very first time, and they're like, it's always pointing me to the stocks that are actually going to move. So I don't have to worry about that anymore. Is the stock doing volume? Is it slightly below? Is it slightly above? I need massive volume. So, when you fold statistical probability in with some other basic tenements of trading like volume and support and resistance, you throw a little volume, you sprinkle a little support and resistance in there, and then you throw a couple tablespoons of Holly in there. I mean, that is a very simple and good recipe. It's just like foods. The best foods are the simplest recipes, right? And it's funny how that translates into trading as well, So, I don't want to bore everybody by showing everybody these winning trades all day that look pretty much the same. Of course, we did have some shorts thrown in the mix today. And, of course, it's always good to have a little bit of preparation for the short side, but we can see out of 1, 2, 3, 4, 5, 6 short trades, it was good to have a little hedge in there. Didn't hurt us too bad. We had one winning trade on FCFS. Had a pretty good liberal shortstop in there of 71 cents. And just to give everybody a little taste, what did it feel like when you were trying to short today? Well, Holly called the short right here, in this bar as that wick occurred. She's like, okay, right, I get short here. And then still has to sit a little bit of a wiggle before she eventually makes her 24 cents with risk off and 20 cents with risk on. And then we can see the rest of the shorts today pretty much were in the trade working and then got a little wicky, so Holly's going to bail on the reduce risk functionality. But as we can see, 20, 26, 25 cent stop outs versus worse had she went risk on. So
and don't forget about AX. Somebody, Leon reminded me.
Oh yeah. We can't forget about the creme de la creme.
AQXP. Yeah, that was an incredible call, and
that brings up a good time to point out the risk on chart. So if we take a look at what Holly did right off the open, as she starts piling into positions, never really underwater this morning. It was just straight off to the races with some gyrations as the market ebbed and flowed. And we can see at one point in time, she was up almost 6 points. And we can see today she closed 423. So we're like, what really caused, wonder why we didn't finish at highs here. But where's that other, close to $1 something that initiated for this? Was it just the whole blotter pulling back in unison, or was it one trade? So here we go. AQXP, and this is a very good example because it allows us to show you more money that was out there today that you cannot see reflected here, or even in the blotter row here for AQXP. So talk about a beautiful entry. My goodness. And once again, here's that nice little micro consolidation area, a little wedge, a little NR7 action. And then Holly says, you know what? This looks really good from a statistical standpoint. 11.98. I'm going to recommend a buy signal here. And of course, here You just draw that line like so. Here's the entry for Holly, and then whoosh. I mean, hell, by the time you were thinking about getting out, you're like, well, it just keeps on going up. So, plenty of time to think about it. Never went against us. Stop loss on this one was down here, so a little bit tighter of a stop, but even
If you
more
just
poetry in
if you
motion.
just used a 5 minute bar reversal on that one, you made, gosh, what was it? Probably $1.50. Just using a 5 minute bar reversal for an out, and you can see the daily there as well. Yeah, that's
hmm And anytime Holly spits out a trade and you pull up the daily and you see whatever range has been established, if you see it way above that range, you look back to the left and try to predict, okay, this is the train heading north. What potential cities in the Italian countryside might we be stopping at on this train ride? And all we have to do is draw some lines across, from these pivotal areas.
And do me a favor, put your cursor on the April the highs there in April, those two little double wicks side by side.
Right here?
And yeah, what does that correspond to? Pretty much her entry, I believe. I think I checked that earlier. Yeah, that's just hot thing.
11:10.
Look at
Yeah.
that, just a total. Maybe she was a little bit later than that, right? Wasn't she?
Yeah, a little bit later.
Well, it was huge volume coming in. So, but anyway, it definitely cleared that breakout, and she had to chase a little bit, but still, look at the move afterwards. Just
Yeah, and when we're right here and Holly's saying buy it, of course we can reference the previous footprints in sand, okay? And by experience and repetition, it's not that hard to do by going, okay, this was the original range break right here. Up again. Wham, did it one more time. Up again to this wiki area, and then, okay, you're like, okay, well, this is opportunity number 3. I can see here there's definitely a buyer because these footprints in the sand are telling me that. Buyer and seller are equal, buyer steps in. Buy and seller equal, buyer steps in again. Equalization once again for the pop that yielded the biggest move of the day. All right? And by getting familiar with seeing this little stair-step pattern here, that is you're learning, okay, there's a buyer in here. You can't just buy everything at once. They have to try to work it, not impact the market too much. But when there's a large buyer and a small float, eventually he's got to get the stock bought, and what you're seeing here is the result. So just another beautiful chart set up from a statistical standpoint, and then it gives us humans some things to go on too, because we can look back here and go, oh, we've seen this before. Jamie, Steve, and Andy have talked about this ad nauseum, okay? And so, through repetition and, putting yourself in front of the monitors every day and watching Holly, this methodology is repeatable, and it's simple, and it's proven effective. And as we say all the time, we're going to keep showing you what is working, and when the time comes, it's not just going to be like, hey, everybody, they pushed the red button, and now the market has changed. It never happens like that. It happens gradually.
Right.
A plant, a tree, it doesn't just go from a seedling to a full-grown organism. There's a little growing period there. Just like when this market does finally decide it wants to head the other way, it's not going to happen all at once. Maybe the first day will be a little bit crazy, but there'll be a series of events, and the good news is we're all going to have front row seats to it, and as we humans all try to adjust, Holly's going to be doing the adjusting for us, so we've got an AI on our team to assist us in that transition when it finally does come. So in the meantime, all we have to do is keep going with the trend. The trend, they say, is your friend, as long as you're able to identify it.
Yep, absolutely. One other thing before we move off of the, we've got to bring Scott in next, and I'll get in my other topic. I promise you guys, I'll cover it in the next next webinar. But I did want to talk about risk on versus risk off, because a lot of people might argue it's like, well, hey, the market was pretty much the same as yesterday. Why would I stay in risk on? Well, this is where you have to put your trader's hat on, because Gold is a different animal. Okay, first of all, you have it's a different creature. It doesn't need the market to be going up to be moving. As a matter of fact, gold was having its best move of the day when the market was selling off. So this is where you have to put your trader hat on and look at the volume coming in, look at the sector-wide move, and look at the pattern and tell yourself, hey, there's probably a lot of shorts covering right now because it's been a great move for the shorts. So a lot of things added up in my mind where, hey, this is risk on, even though the market is selling off at the time, which I thought was great for gold at the time, and the market, like I said, it pretty much ended up flat on the day. But to me, gold's a separate beast. If it would have been long, a bunch of semis and financials, yeah, it may have been a risk off. But this is where you have to. Holly's not a black box, not yet at least. Holly gives you great ideas, but you have to act as a trader and manage those ideas. So this I thought was really a risk-on opportunity when you're dealing with the gold and the amount is sold off lately and the potential for a big bounce. So anyway, we've reached our hour. It's probably time to bring Scott in, guys, and I promise you I'll bring it's a good topic about. Do you need to change it to me, or do you actually have the?
I could just show the slides for Scott.
Okay, great. Right, just show the slide then. That'll be fine.
Yes. Scott, if you're ready, we're ready for you.
Yeah, y'all are lucky today because you get in at a head start for the Labor Day sale. If you're overseas, you may not know, but I'm sure all the U.S.-centric traders out there know that it's Labor Day weekend coming up. So we've got a bigger discount than usual here for you, and it's good until the end of the weekend, but you're going to want to use it before then. That code right there, LABOR 2016, takes 25% off your first month or year of premium. That's a whole quarter off. So you can get your first year for just $14.16 instead of $18.88, or your first month for $141 instead of $188. The same code. You can also use it to pick up standard, which is a great value as well. 20% off of that. So your first year, $710, or first month, $79. And all of these include a full hour of one-on-one training. As soon as you activate your subscription, go to the support page, click on training, and pick up a training time with either Andy or Jamie or Steve. And they will give you the best head start to using trade ideas and getting set up for your trading style, get your layout all set up and everything. So again, go to trade-ideas.com/price and either use this to get on board with Trade Ideas if you're not yet a subscriber, or if you are a subscriber, say you're on the $99 a month right now for standard, just upgrade. Big savings. Just go ahead and it'll overwrite your existing subscription. Very easy way to do it. Save a bunch of money at the same time. If you're currently on the standard $888 a year plan, just contact info@trade-ideas.com and they'll help you add premium to your account. Thanks everyone for attending. The recording will be up later tonight or tomorrow morning sometime. You get an email tomorrow with from GoToWebinar with the information about where to find it. You can follow Jamie at QuantBot on Twitter. Steve Gomez is Today Trader on Twitter. Facebook.com/TradeIdeasPro is where you find us on Facebook, and we sometimes post some stuff there we don't post elsewhere, so just go ahead and follow that too. Info@trade-ideas.com is the best place to go to email us for info, for help. Our phone line's great for help with billing and subscriptions. However, if you have a question about how to configure something or trading, you're going to want to go to info@trade-ideas.com because that'll get routed to the best team member to answer that specific question. Okay, hey, thanks, Andy. Thank you, Jamie. So everyone have a great holiday weekend, and remember to share that Labor 2016 code with your friends if they're not on Trade Ideas yet. It's good until the end of the weekend. Thanks, guys.
Thanks, Scott.
Hey, everybody. Have a great holiday weekend. We'll see you next week.
Bye,
That's
guys.
right. Bye-bye.